All right, hello everyone, and welcome back to the end of the week. So yeah, 3 weeks in a row, we're killing it right now, man. Let's keep going. So 8:30 Friday, news drivers building permits, okay? And I'm gonna be talking about my current levels that I'm anticipating price to draw to, and then additionally, we'll be looking at some other things as well. Let me take that off the charts for now. Let me go to my institutional chart here. Just switch over that real quick, and we'll look at where today is gone. Of course, we're not going to spend too much time on that. Like I said, I mean, it would be insane to go over that every day. But anyways, you can still see that we are below the order block here on the weekly, where it's the very same thing for this monthly order block here. We traded back to it, but we're respecting that overall. Let me change to my list right here. Okay. So we're going to go ahead now and go down to the S&P, see if it's the same exact thing, right? So with the S&P, as I mentioned, we have previously traded to equilibrium. We saw a reaction off of that, and now we are seeing price actually move back and filling in that range. Now we've refined these ideas in a lower time frame. Let's see if it's true for the week. Okay. Same idea here. In fact, today we actually took out this high back here, and so this would actually be applicable to a turtle soup sell and expecting lower prices. Now, like I said, I mentioned yesterday that picking highs is bad, but what would I really be looking for in terms of like a sell that would be indication of price going lower? Well, I'd be looking for what's actually considered a market structure shift, and we have to focus on where price came from. Okay, so just on the weekly, here's the only other thing I'm going to add to this. What we see here, and part of the reason we can expect lower prices is first on a higher time frame, and we'll go through that in a minute. We had actually taken sell side, okay, and we actually see that here, okay. This trade below these candles lows, not aggressively. We still have this marked as a clean low. But additionally here, when we saw this expansion or expansive range, we see price going below these up close candles that are just a short-term rally and then breaking lower. And so now we're seeing price that, it created this large just downward range. We're seeing price rebalance that inefficiently traded range. Now, as far as, how high it will go, we'll just have to see on that. But currently for the S&P, at least here, we are still bullish. And for the NASDAQ, we may see a more aggressive run, but my thoughts on the NASDAQ are a little bit different just because these aren't moving in direct correlation. Like we're here in this consolidation range, expansion to the downside. We have this low back here, cleared that low. After we cleared that low, we see this consolidation, break above an old high, returns to it, continues to this run up, actually trading back to this order block. This is external range liquidity here. External range liquidity goes to internal range liquidity, so we would be looking for an internal range liquidity target. We had this high here, this high here, this high here, and now we have this order block. So ultimately on this, I'm expecting price to trade or respect that order block. Let's go down to our higher time frame chart and we'll continue studying price. So we're going to be noting, of course, any new clean highs or anything like that. As far as clean lows, we do have these clean lows here, and we also have this stop hunt. Let me go Alt J. Oh, it's not working. Okay. J. Why is it not working all of a sudden? Maybe hitting Alt J, but whatever. Oh, it's because the line is black. That's my friend told me. I swear to God, that's what he uses the black lines always. All right, but anyways, listen. So I probably have I have like 10 of them now. Oh, look at me. All right. Oh, hopefully there's no more. But anyways, here we go. We can see that price had done this rally lower. Okay. Breaks below this low to take the stops below here. Now, why is price trading back up here? Because we have this large liquidity void here. Well, my idea would be that we are currently trading up here to actually, all right, let me actually phrase it a little differently. Everyone that was here in a buy here would be in massive drawdown when we came down here. Price is trading back up here to help them mitigate their losses. All right. I didn't realize here that I'm actually on the hourly, but it's the same idea. Let's see if we can refine that lower time frame idea with a higher time frame analysis. So as I mentioned, for this, I am still expecting higher prices. Now, we did just take buy side here as well, in the form of the wick actually spiking above the bodies of this candle, and so now this is no longer a untested high. Again, that was part of my target. Now we still have this untested high on the monthly, but again, we are looking at this as an order block. So simply, what I'm seeing here is just a return to a higher time frame order block. Okay, and here we go. All right, so here we are on ES on the daily. Now it's the same thing here, but as I mentioned, this is a little bit different. The reason why is we still have these relative equal highs here, which I am expecting to be targeted. Here's the consolidation before the down move, so last up close candle. Here's that low, perfect with the buy side, and additionally this volume imbalance here, so price has more than enough reason to continue higher. Additionally here, we can focus on one other thing. All right, so these are not moving correlated, obviously. Now, if you look, let's see, October 12th till now, we can see it makes a higher high. Let's see about here, October 12th now. Oh, wait, no, actually, it is the same. Okay, that's not right. Okay, sorry, I was looking at something a little bit different. Sorry, it's this high back here. So that was September 12th, actually, September 12th. Okay, and September 12th. So from September 12th on the S&P, September 12th to now, we are currently seeing a lower high. In other words, the S&P is showing weakness. Now, we did just balance this range here, and we do still have those targets up there, but what we see in the NASDAQ is we actually are showing strength. So overall, to conclude, or just say what we're looking for here, I am currently expecting price to reach higher on the S&P. For the NASDAQ, I'm not entirely sure. I would be looking for a reason for price to draw lower. Let's go down to the 4 hour and see if we can refine an idea like that or look for something that might make sense. Okay. How does this? I don't know how to turn this back. It's really annoying. Okay, oh, there we go. Okay. All right. So here we are on the 4 hour looking at today's day. So we had CPI create this really aggressive range for the next week, or that's what I presume here with us, trading back to that order block. Also, taking out these highs here, taking out these highs here, and even with the wick actually taking out these highs all the way back here. In other words, we have taken out every single level of buy side liquidity. We're also in a higher time frame order block, and we also have a large displacement leg. So with us being above these highs, we would reasonably expect price to show a willingness to go lower to rebalance these inefficient ranges. And additionally, we've continued to see higher prices. Like if we go to the weekly, you'll see that. But ultimately, we're currently expecting lower prices just with this very aggressive range. And so that's something I've been framing now for a while, but we're going to try to see, what we can again see in this price action. So we have this low back here that was on Tuesday. So Tuesday and Monday and Tuesday of November. It's both Tuesday. Oh yeah, because I'm on the 4 hour. Sorry. All right. So on CPI, when we got to the top of the range, we created these relative equal lows. We traded below them on Wednesday and took those out. When we traded below them, it was very aggressive. All right, so this would be a form of distribution. Why is it a form of distribution? Because we're above all these relative equal highs. All right, additionally, we then see price consolidate. So what I would be looking for is aggressive movement in either direction, but the idea here is that we are currently filling this void. Let's see if we can frame a similar idea here. Now, like I said, for the S&P overall, my idea is that we are still bullish, but we have to also mention the fact that we have traded here to this liquidity void. All right, looks like we've been rebalancing that, and we are consolidating. The idea here still, is we still have these relative equal highs, but we have to understand again that, let me go to the higher time frame. All right. So again, we have to understand here that ultimately we're seeing lower prices. Currently, it's just rebalancing that price range, so I am expecting it to trade there, but we will see price eventually, continue lower. At least that's what I'm expecting, because we have these relative equal lows here. We have a lot of untested lows previously, and ultimately, it's been the same idea here with just this really aggressive range upwards or to the upside. Keep in mind, for every one of these blue candles, there has to be a black one to rebalance that price range, okay? So let's get on to the 1 hour, see if we can refine these ideas even more. Let's look at the weekly range as well. So of course we're on the NASDAQ. We start the range by consolidating at the very beginning of the week on Monday. Monday consolidates, and then we have this aggressive movement on CPI, which was on Tuesday. Now, that a movement wasn't enough to, take everything, but it did take these stops out, these relative equal highs. That news driver pushed above and took these relative equal highs. All right. It additionally took this high out, and then additionally took this high out, and that was on Wednesday. Wednesday created the high of the week. Okay. Afterwards, we see price consolidating. So, in other words, smart money, who have their long positions priced in down here, okay, are now distributing them above prior highs to people who would, buy them at a higher price. In other words, they're liquidating their positions. They're selling the positions that they accumulated down here. So now that we know what's going on here as far as like this consolidation, this back and forth, all right, let's see if we can apply the same idea here. So for the S&P, same exact thing here. Okay, this is Tuesday, CPI, traded above these highs. I mean, it looks like we did that a little earlier in the week, but we had this whole range here, and CPI took that out. We also had these relative equal highs, CPI took that out. And then additionally, we had this void right here, which we see price trading to as well. So, as I mentioned, we do still have objectives up there that have yet to be seen, but we're seeing the S&P show weakness to its counterparty, who is making higher highs. So we keep that in mind. This is a form of SMT, okay? So it's a form of manipulation when these pairs don't move intact, and it's very noticeable. All right, so that said, we're going to finish on the last thing. Hopefully I'm still recording, because that was so annoying. Okay, yes I am, thank God. That was so annoying earlier in the week, dude. Bro, I really was like, I had the best video, I swear to God. All right, anyways. So, here we are, NASDAQ 15-minute, oh yeah. Let me go to my lower time frame chart now. And also, I'm going to be releasing another video this weekend where I'm going to be delving deeper into rejection blocks and backtesting that. But for now, okay, I'm going to be on the 15-minute and looking at what price is doing. So here we go. We have a run above buy side here from Wednesday's high. Okay, let's see, and that's on NQ here, and then we're on the 15-minute. So Wednesday, if we measure bodies, here's the high of Wednesday. Today we took that level of buy side. Keep in mind as well, we are in that liquidity void. We're also seeing a consolidation now. If we were going to continue expecting more movement to the upside, then we would expect a more aggressive run. This can also be a false breakout, or what some would see as a continuation pattern. All right, because when we break out of here, a lot of retail traders are going to think, oh, it's a continuation, it's continuing higher. All right, what happens then? Well, smart money, who has their positions again all the way down here, right, who went long here, we see this form of accumulation in a consolidation. All right, they've pushed price all the way up here, and now they are distributing their positions above an old high. Okay, and to the retail-minded traders that would expect price to continue higher, well, guess what? Smart money, we're showing distribution here in the form of that aggressive movement lower. It's also a break in structure, because we have these relative equal lows, we have aggressive movement lower, we have this consolidation, all right, and afterwards we see price go ahead and rebalance that price range here. Okay, that's what we're looking at right now. Price is rebalancing that price range, but additionally, if we look at the last up close candle before the down move, see price hits it exactly right here, and then we see that aggressive movement lower. So I'm not saying anything as for that. what I would want to see here, to give us a more definitive thing or a more definitive answer, just because this is kind of like, consolidation and so on, and then rebalancing this range and expansion to the upside. All right. Ultimately, I would like to see a more aggressive break below these stops before entering in a position. And I'm not going to be trading. Not while I go through this content and mentorship, but I am going to be anticipating where I expect price to go to. All right. So very very much the same thing here. All right, on the Nasdaq. Now on the Nasdaq, let me see. So actually on the Nasdaq, it shows weakness here in the form of, on Wednesday, we created this high all the way up here, and we don't have that all the way here at Friday, okay, when we're looking at this range. It's non-existent. There we go. Okay, it's Monday, sorry. Boom. All right, so here is today's range. So overall, at least for Friday, we did trade above those highs. We traded above all these relative equal highs here. All right, and this high here. We also had filled in this void, okay? And this seems to be a, let's see. Just trying to understand or get a grip on where it came from here. So with this aggressive movement now, it seems like we are in a phase of distribution. All right, after prices moved all the way up here, we see this very sideways range, and we see accumulation on both sides of the market. All right, so that all said, just to summarize everything again, for NQ, I'm not exactly sure where price is going to go. On a higher time frame, I recognize that we've traded to an order block, and I also recognize that we have CPI below us. Now, when I framed these ideas, I'm keeping in mind of this range, but I need more signal to see price go lower, or I need to see a more aggressive run below this consolidation range before that. And it's pretty much the same idea here. I need to see a more aggressive break below an old low, but for S&P, we have it in the sense of like us having this low here. All right, we have this consolidation range. All right, expansion, retracement. Okay, and that's what we at least saw today. But we also traded above here, above these buy stops. On a higher time frame, this is just a consolidation range, right? So I still require more information, and I still would require us to break out of this consolidation to the downside before I would expect price to continue lower. So I'm going to leave it at that, and I'll be posting a video tomorrow.